Yeah, good. Hey, good morning. Como allez-vous? Welcome to QuantBox Live. Yeah, it's 8:48 on Wall Street, approximately 3 hours before the open of trading. Welcome to your QuantBox Live. Even crashing internet can't stop the passion that we have for fundamentals. During QuantBox Live, we get our best fundamental investment opportunities. Yeah, so we're gonna, we can look at gold, oil, stock markets, all the different currencies around the world. What does QuantBox do? It automates your macroeconomics. Why do we want to do that? Well, based on deep dive into research and analysis, you have the confidence to let your winners run. My name is Wayne McDonald. I have been investing in the markets for over 20 years. Before that, I was a venture capitalist. Cool. I've gone on to get my macroeconomics degree. Yeah, in my 40s, bro, got my economics degree because I have a passion for this. Yeah, I love this because I use economics to make investment decisions. That's why I did it late in life. My education. It's that important. So, anyways, so I've automated all our research, pulling all this data from various, like this comes from the CFTC, this comes from candlestick analysis, this comes from a seasonal database. Some of this other stuff comes from the OECD and the Fed. I mean, so it's pretty robust, but it helps you make your decisions. So, anyways, if you're watching this on YouTube, you're watching a very delayed version. Why don't you swing by, start with the retail trader option? They all come with an $8 trial. Take the $8 trial. And what you'll be able to do is organize your thoughts logically. These are the things you might want to buy. These are the things you're kind of neutral, but you want to gauge where they're going to be in the future. What are bearish right now? You want to do that. You can look at institutional versus retail positioning. So you can see that, you know, institutions are heavily long oil and they're heavily long Kiwi CAD, but they're heavily short USD, Turkish lira. Yeah, that kind of stuff. It's a great way to organize your thoughts so that you make intelligent trades. Anyways, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Ah, this mummy fuel is good. All right, let's log into the Pro. The Pro. Bernd, we waited for you. So now that you're here, we can start. All right, 4.99. 4.99. I don't know if we actually hit 5.0. Did we actually hit it? Did we? It did hit 5.0? Okay. 4.99. And maybe a little bit beyond. Bond markets are crashing. Okay. And that's in the middle of the yield curve, and prices are moving also at the long dated, the long end of the curve. And Jay Powell talked about it at his speech yesterday. You know, he talked about how most corporations and homeowners have termed out, meaning they saw things coming and they've locked in low rates for a long time, and so it doesn't impact them. But nonetheless, as interest rates rise, yields tend to rise just in relationship, and therefore, as new fresh cut yields rise, it pushes the value down for all existing bonds. Like, let's say you have a 10-year T note that pays 2%. I can get one that pays 5. Why would I want your stupid 10-year T note? You need to get out of it for some reason. Now, why would you need to get out of it for some reason? Well, maybe you're a bank and there's a run on your bank and people need they want their deposits back. They're like, give me my cash today, now, all of it. But sir, your money is locked up in a 10-year T-note. Shut the back door, give me my money. Okay, they have to. So what does the bank do? Sells its 10-year T-note. The only thing is it's worth 25 cents on the dollar. If you just held it for the end of the term, you'd get all your money back, but you're forced to sell it today at a massive loss. And that's kind of what's happening. There are more sellers than buyers. The Fed's also selling, and the Treasury's selling. And banks and other institutions like pension funds might be in situations where they have to sell, even though they don't want to, and therefore a bloodbath. Jay Powell was clear. He said they're watching the yields skyrocket and prices collapse in the bond market, but it's one of 9 reasons, but none of those reasons are the Fed. Okay. Well, that's good. That's really good, Jay. Good, nice. So, anyways, it just might be related, but anyways, oil through 90. Holy smokes! Gold at 2,000. Holy smokes! Told you, told you, told you, told you. S&P 500 down. Yeah, I made some big decisions yesterday, and thank goodness. And I have more decisions to make over the next 48 hours. Yeah, and probably sooner than probably in the next 5 hours, I got to make some decisions. Excuse me. Me. Euro dollar flat. Bitcoin. Whoa, what? Whoa, what? 5? We got a 5 handle on the biddy? Jiminy Cricket. Okay. Things look bad. Things look bad. Okay. Thank you, risk gauges. Now to get a little more into the numbers, little bit of increase in volatility, huh? I'm actually happy about this, and it's now something that I need to think about. I don't know if I want to do it just because of geopolitical risk, but I have told some folks probably 6 months ago I wanted to see a giant spike in VIX, and then I was going to short. The thing is, I think this could get a heck of a lot worse very, very soon. Between now and Monday, I'm telling you, things can get a lot worse. So under normal situations of abnormality, see, there's like, do you remember there's the known unknowns, but then the unknown unknowns, right? Like there's normal times of duress and abnormal times of duress, and this is abnormal. The tension in the Middle East. Okay. Burns says Bitcoin options expiration data. All right, cool. Yeah, we could take a look at that. Bitcoin is a big winner today. Wow, right? And you're like, what does the world look like without Bitcoin? Yeah, much different, huh? Now, oil's the big winner. Get rid of oil. Okay. Now, so we get rid of more and more outliers, and we're zooming in. The biggest winner, the biggest, most profitable asset in the world is up 0.4 right now. Snooze fest. So you take away Bitcoin, you take away oil and gold, there ain't nothing happening, no how, nowhere. The biggest losers right now are equities. Okay. Yen down. So, I mean, Nikkei is down, DAX is down. Okay. NASDAQ is down, Dow is down, S&P 500 is down, FTSE is down. Yeah. Risk off, huh? So what I've been saying in particular, I was screaming it yesterday. You got to do something to protect your assets. Don't just watch this. Oh, it can't get worse. It can get worse. It can. Okay, we're down a couple of percent now. But if you look at why and you look at, let's say, the probable outcomes of the near future, and you look at things like the economic situation, in many cases, things look good, but then there are many parts of the economy that look bad. You look at continued monetary policy, not just in the United States, but globally, and you start adding all these risks on. This is down, let's say, 1% yesterday. What's the big deal? Then you look at technical analysis and you look at what's happening on the charts relative to what should be happening based on seasonality and all these additional new risks and oddities to our current situation. And I don't know if it's going to fall another 1%, another 10%, another 40%. I don't know. But it always starts like this. It's down 1% now. If you're in the NASDAQ over the year, you're still up, what, 8%? Like you're still in the money, bro. But I think if you're going to be a professional trader, investor, or money manager, sitting there and staring at the car wreck won't do anything. Okay. Many, 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 many years ago, I was in a terrible, horrible car accident. I wasn't actually in the accident, but I was there. It was happened right in front of me. And I almost flipped the car in the ditch because I was moving 110 miles an hour as it happened. Car exploded right in front of me, like flames exploded, right? A semi truck hit a car. I go this way to avoid a car accident, go in the ditch, 110 miles an hour. Not a good thing, right? So I stop and I turn, and there's the car completely on fire, flames inside the car. The whole back end of the car is missing. People are inside. So what do? Well, you save the people, right? And I'll never forget, the door wouldn't open. So the truck driver that hit him, I don't believe it was his fault. But, anyways, he jumped out with the tire iron. He already knew what to do. Pry open the door. He knew, obviously, this happens. So the truck driver and I pry open the door. It's so hot that the headlights explode from the heat. And I'm like, and you think the car is going to, you're going to die in any moment, right? Because the car is going to explode and you're going to just burn with them. So, anyways, we pull them out right before the car explodes, just like Hollywood. Okay. And then I turned and realized about 25 people had gathered to watch us. Not to help. They stood way back from the flames, standing there, right there on, what was it, Highway 5, California. Just everyone just standing there, like 25 people, because all the cars kept, approaching the accident. And so everyone stood and watched the two of us save their lives. Um, don't stand here and watch this. Okay. You need to do something. You need to save your money. Okay. And so I don't know if this is no big deal. Maybe I'm overstating the risk, but I can see scenarios where the tensions in the Middle East get really bad. I can see that. And oil does go to 200 and that kind of stuff. And inflation gets out of control and the Fed can't do anything about it. Okay. What do we do then? Well, I don't know, but I could have done something now. Okay. So that's what I'm preaching. It's our job to do something now. And I started doing things to handle those contingencies yesterday. For example, I went 16% cash. Okay. Anyways, so you got to do something, is all I'm saying. Okay. So I don't know the future any more than you, but I think about it all the time. But thinking about it is like standing on the side of the road, okay, staring at the car accident and doing nothing. Cool, I guess. Bitcoin up 11.67% for the week. Oil up 9% for the week. Yields are up 8.55 for the week. Gold is up 3.5. Wow. Cool, right? Do you remember my advice almost 2 weeks ago? Oil, gold, dollar, and Swissy, right? Yeah. Swissy strong, Swissy strong, Swissy strong, Swissy strong, Swissy strong, Swissy strong. Cool. Anyways. You can see actually Kiwi has done very poorly, right? Pound has had a tough time of it. Kiwi's really crushed over here too. So that's that. And instead of going through charts today, I thought I'd bring this up. And so oil has now gone from, in the last week, it's gone from 80 to 90 WTI. And that's because of the potential threat of the geopolitical risks in the Middle East to supply. We also know we don't got no oil in our strategic petroleum reserve. The Biden administration did it to push down gasoline prices, oddly enough, right around the midterm elections. Okay, enough said. But now we don't have a strategic petroleum reserve. So recently, the Biden administration struck a $6 billion deal with Iran for oil. I thought they were our enemies. But now we have tensions in the Middle East because this was only like 2 months ago. now they're an enemy again. So now they're striking a deal with Venezuela. And this is what happens when you make yourself vulnerable. Now the White House is going around doing deals with our enemies, with bad people that do bad things to humanity. It's a massive step backwards to deal with Iran or deal with Venezuela. So this is what we're doing now. But nonetheless, we don't have enough oil to put into the strategic petroleum reserve. I would have built a pipeline with our friends Canada a long time ago. Okay? Canada contributes to the world. We have lots of natural resources like oil and food, right? We have lots of funny actors. Go through Hollywood. If an actor in Hollywood made you laugh, Canadian. Okay? They're good. They're good people, good, hardworking people that produce stuff. We actually make things. You want wheat? We got wheat. You want beef? We got beef. Diamonds, gold? We got it. Okay, so we produce stuff. We're good people. You should do a deal with Canada and not with Iran and Venezuela. I'm not saying they're bad people. I'm just saying Canadians are. I like Canadians more, or at least the governments. Okay, so nonetheless, we ain't got no oil, and we're willing to work with people we don't see eye to eye with, like Venezuela. Well, what if Tammy rolls in? Remember, I've taught you this. It's on various YouTubes. I haven't done it on this channel, but I've done it on the FX Bootcamp YouTube channel, on the forex.today YouTube channel. Let me get my drawing tool out. I had to reboot my machine. Oh, good, it worked. Wow, that's new. All right, it actually worked. So what I've taught you before, if the hurricane comes off the coast of Africa and it comes in high, it does this. Okay. Because high pressure builds up here and it pushes it off. Okay. If it goes this way, you buy frozen concentrated orange juice futures, right? It was the Dukes. It was the Dukes. Yeah, remember that movie? Frozen concentrated orange juice. Okay. And maybe Home Depot and Lowe's. Okay. These are things that you do. But you want to do it before it hits, before the person on CNN saying, this is the worst it's ever been, ever. Okay. Um, what what do you what let me get a different color. What do you do if it's low like Tammy? What happens? It takes out 3,000 oil rigs. Now, maybe it doesn't do much damage. Maybe it just shuts them down for a week. We don't have any oil in reserve. We don't have any in storage. We have so little oil in storage, the pumps are going to break soon because they'll just run out of pressure. It's sort of like a half, like, I don't know, a straw with a hole in it. When you're like, Wayne, straws have two holes in them. A straw with a hole in the side. Okay. Geez, you guys, right? Yeah, a hole in the side, not the ends. Okay. Yes. All right. Because otherwise it's a chopstick. I get it. All right. So you lose vacuum, you see? And then you have to recreate the vacuum. And when you're talking about something as big as oil storage facilities, it's not that easy. Okay. And the pipes have to be full. You can't have empty pipes. You just can't. It's just part of the process. And we don't have any oil in the strategic petroleum reserve, where we have dangerously low. It's so low that the caverns, because it's actually underground, can collapse. Okay, like we don't have any oil, fellas, and we're so desperate now. And this was a political action. Don't confuse this with economics or anything else. It was a political action. Complete 100% politics. And now we're in a situation where we're willing to deal with Iran and Venezuela because we're in such a dangerous situation. And I look at Tammy and I'm like, oh God, that's coming in low. And I've taught this 12 years ago. I'm not making this up now because I'm anti-Biden or something. No, 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 no. Watch the training videos. I've done this 12 years ago, 15 years ago. I say the exact same words. If it comes in low, there's a high probability it does one of these things. Now, sometimes what it's done, we've seen it, where it runs into Mexico and it just sits here and it rains and rains and rains, and Belize and Mexico and Honduras get massive mudslides, and many people die, and it just gets caught there because there's pressure here and there's pressure here, and it just gets hung up on the mountains because it can't go back out to sea, and it just rains and rains and rains, and people there die. But I think that those are special circumstances. Many of the times it just gets kind of pushed up this way. And again, it runs into pressure here and it runs into pressure here. This is why it turns it. There's mountains all along here. Okay. So it turns the hurricane north, even though it's way down here going this way. It gets pushed this way, and then it gets pushed this way. And all that oil in America, 90% of it is right there. And much of it is at sea. If this goes in there and it takes, even if there's minimal damage, they still have to shut all the at sea rigs to protect them. And they're all right here. So it takes them offline for what? 2, 3, 4, 5 days? What if there is damage? 10, 12 days? Longer if it's very severe? Well, we don't have any backup oil. Like, again, we're knocking on the doors of enemies. Like, will you please help us? We'll give you lots of money. To the people we don't want to have lots of money. I think we'd rather have a peaceful, prosperous democracy in Venezuela. Okay. So anyways, ouch. So there's another concern on top of many concerns right now. And that one is also a doozy. 2 or 3 weeks ago, I proposed, like, we had a hurricane, what was it, a month and a half ago, and it did this. And I talked about it then. I'm like, we don't have any oil, and it could have done one of these, and it would have been devastating to our situation. It would have taken the entire United States economy out. Like, massive. We're that vulnerable where we got lucky. Okay. Now we have war that threatens those supplies even more. How bad is it? There's a meeting today with Iran and Saudi Arabia. They hate each other, by the way. There's a meeting face to face in Riyadh. And then later today, they're flying to Egypt. And so you have all the players there: Egypt, Turkey, Saudi Arabia, Iran, Germany, the UK, the King Hussein of Jordan. You see all the players? Who's missing? Well, Israel's not going. Who else is missing? Yeah, Jim, the United States. What? I mean, dude, seriously. What? I mean, anyways, so yeah, big meeting today going on. But right now, like literally right this second, Saudi Arabia and Iran are meeting face to face. I haven't done that in a very long time. So things are happening, and I'm not sure if it's for the better, but I think, and I said it 2 weeks ago, eventually, as we go tit for tat, which we talked about, and it's happening almost exactly the way I said it, something's going to happen to Saudi Arabia. And if the United States doesn't produce enough oil and Saudi Arabia has problems producing oil or shipping oil or something in the supply chain of Saudi oil, I mean, and on top of that, we get a hurricane. I mean, oh my God, it's zombie apocalypse thing. Now, in reality, what is there, a 2% chance of that? But what scares me is there's a 2% chance of a zombie apocalypse. Really? That's way too high in my ideals. But so anyways, there's a huge meeting going on in the Middle East today, and the United States isn't even there. Jiminy cricket. Okay. Biden was just there on Wednesday. It's Friday, and they're like, yeah, you're not invited. Wow. So anyways, so I have concerns. That's all. My message to you today, as an economist and as a money manager, is you must acknowledge the real world risks and plan for scenarios of, best case, worst case, base case, and various versions of it. What if things go bad? A little bit bad, moderately bad, horribly bad? What should you do? I need you to think about it now when the markets are still positive. Like I said, if you bought NASDAQ in January, you're still up 8%. It's not that bad right now. But if you put in reality, and I'm not a fearmonger guy, but if you put in the reality of the, let's say, possibilities of risk, what is the probability of risk? What should you do in those situations of moderate risk and then worst case scenario? What should you do? You should open those charts and you should look and start doing technical analysis. And what I saw yesterday is technically the S&P 500 looked like it was a sell. Fundamentally, it's a buy. Seasonally, it's a buy. Technically, it's a sell. And I have that geopolitical risk on my shoulders. So, did I sell? No, but I got out of a large position in anticipation of it could be damaging to me. My next step is maybe going to even more cash. My next step, if things continue to deteriorate, is then I will actually short. Right? So, but be prepared, do thoughtful analysis, don't be reactive, be proactive, have contingency plans, and don't stand there and stare at the car wreck and watch the flames burn. You're the one that needs to be the hero. And it's hard, it's difficult, it's scary, in fact. Do you think my heart skipped a beat when I'm pulling bodies out of a window with flames so hot the headlights explode? Do you know what that sounds like in my mind, in my memory? The sound of exploding headlights? It's the loudest sound I've ever heard. Deafening. Because I just thought the car exploded and I'm dead. So to pull the people out and drag them to the side of the road and stand up and turn around and see no one else did anything, don't be the spectator of this situation. You need to save your money. You need to be proactive. You need to be ready, willing, and able, not freak out. See, when I worked at NASA, I was trained to handle stuff like this. So I don't freak out. So I knew, I didn't know exactly what to do in that situation. I just knew I had to save them, right? So you don't freak out, you do something. And that training has been helpful in multiple situations where I've seen accidents, right? I saw a pedestrian get hit by a car in the middle of Van Ness. And then if you've ever been to San Francisco, Van Ness is a huge street. And within 5 seconds, I had traffic stopped. This patient stabilized, took my sweater off, got his head elevated, calmed him, got someone else to call the ambulance. Just in 5 seconds, had it all controlled because there was a process and not a panic, right? And once again, everyone just stood around. So at least I had somebody call an ambulance, like do something, right? So again, step up and protect your money. Don't freak out. Do your analysis, think about it, plan, have contingency plans. What are you going to do if oil is going to go to 200? You're like, that's beyond the highest high. Yeah, I know. What are you going to do? If it does, have you thought about it? What would benefit? Who would be hurt the most? Think about it now. What if the stock market drops 40% this year? You're like, why would it drop? Well, right, we have two wars going on and they both escalate. But isn't the Fed also inducing a recession? Yeah, I mean, so then why couldn't it? You should think about it now. Okay, that kind of stuff. What if the dollar remains strong for the next 2 or 3 years? Maybe you should start buying it now, right? So you should think about it because we get caught in not stagnation, but we get caught in the now, whatever the right word for that is, the status quo. And we're trained to think in patterns, The humans think in patterns, so we always think normality. And it's really hard to say you're in the water and it's going to be boiling. Not now, but the water will boil at 100 degrees Celsius. Okay. It's hard to see it when you're, comfortably in warm water. It's hard to see that it could get terribly, terribly, terribly worse unless you've already thought about it. So again, don't panic. Just ask yourself, how realistic are these problems? And what would you do? How would you know that it's happening? If the frog had and you know the analogy, right? The frog is sitting in a pot of water on a stove. You know, beautiful analogy. Like, why would you do this? But anyways, you put the frog in some water and you turn the stove on. And the water goes from cool to warm. He doesn't jump. It goes from warm to hot. He doesn't jump. It goes from a hot to excruciating hot and then boiling, and he boils to death. Ugh. I don't know. I didn't come up with the analogy. It's a well-known analogy. He never jumps. That frog could be you. So I don't know if we're going to use that analogy. Let's take it one step further. Let's say frogs could read thermometers. These are smart frogs, like that singing one on Walt Disney, right? Wears the top hat. Yeah. So it's that frog. And not only can he sing and dance, but he reads thermometers. So he has a thermometer and he's like, once this gets to 60 C, I'm out of here, right? Yeah. So how would you know? Think about it now. Complacency leads to bankruptcy. Yeah. So anyways, it's a wonderful life. Peace on earth is good. Capitalism always leads to peace on earth. I'm a capitalist. I love peace. I love other people and other cultures. I want the world to be at peace so we can all benefit and have our standard of living go up. I'm a believer in the future. I'm an optimist. I think in the long run, humanity has the potential for greatness and that we will lead to global peace. We will fix the climate. We will make a huge difference. I think we'll have unlimited energy that will then lead to unlimited clean drinking water, which will then lead to unlimited amounts of food because we could reclaim deserts and grow food and have artificial intelligence and robots and machines go around and farm them 24 hours a day so that there's unlimited amounts of food and energy and medicines and the advancements in biotech to live healthier, happier, longer lives. I mean, we're doing all of this right now, and the future is amazing. So I'm betting on the future, but I have to be ready for now because we have the capacity as a human species for this ultimate utopia that we're nearly there, technically. If we can get there emotionally and socially, that would be great too, but it'll probably take longer. We're not ready for self-driving cars, yet alone peace on earth. But I'd like to think we're getting there. But take care of your money now. Things could get bad, and the only thing that's going to protect you is your money. There's not a lot that you can do for you or the rest of the world if you're dead broke. So protect your money. Don't be the bystander just standing there watching the car accident. Peace on earth. May the pips be with you. May your profits be above average. See you later.